Hey everybody, it's Matt Bowles. Welcome to the webinar. Super excited to have you all here tonight for a very special event. Just wanted to check in, do a little housekeeping up front. We are going to run for about 30 minutes tonight and then have a live Q&A at the end of the webinar. So just want to check in with you guys here. We've got a chat panel here on the right hand of your screen. You should see that, and you can type into that chat box just to let me know that you can hear me and I can hear you. So why don't you just type into there where you are tuning in from tonight and whether or not this is your first Maverick Investor Group webinar that you've ever been to, or if you've been with us here before, and then I'll be able to see you typing that in. Awesome. Isaac from Kansas City, what's up? Valerie from DC, what's up? Lots of people still piling on to the webinar here. We wanted to start right on time because we want to respect your time tonight. And as I said, we're going to do about 30 minutes probably of content. And then everybody that stays all the way till the end, we've got some super cool bonuses for you that will be available if you stay till the end. Also going to do that live Q&A at the end. So save your questions for the end because we may hit a bunch of them on this webinar. Awesome. Amazing. Good to see you, Lee from New Mexico, and Jason from the Philippines is here. Super incredible to see you. Wow. People from all over the world tuning in. This is awesome. Stephen from San Diego. Really, really cool. Awesome. Awesome. Brett from Minneapolis, what's up? Welcome. Okay, lots of people still piling on to the webinar, but we're going to get rocking here. For people that have not been on a webinar with Maverick before, I just want to start with a very basic little bit of information about who we are and what we do. We've been in business now since 2007. That's 12 years. And what I wanted to do is try to condense most of the lessons that I have learned myself and seen people go through over the last 12 years in terms of buying turnkey rental properties. So that's what we've been doing for over a decade. Maverick Investor Group does one thing and one thing only, and we help people buy performing, cash flowing rental properties in the best U.S. markets, regardless of where you live. That's all we do. And it's all we've done for 12 years. It's our one niche specialty. And in doing that, we've been featured in a lot of the real estate investment press over the years. And we've seen all sorts of stuff as this industry has evolved. We got in the game before the term turnkey was really even known, and we watched this entire cottage industry come up and saw all sorts of things that have gone on with it over the last decade. And I want to try to distill those down here in the webinar tonight for you. We've been awarded, we were named one of the top 50 real estate investment opinion makers and market leaders by Personal Real Estate Investor magazine. And a number of other media that we've been featured in. I won't bore you with all of that. I want to jump right into the content, but just wanted to give you that context of who we are and how long we've been in the game. So let's start off. If we're going to talk about mistakes when buying turnkey rental properties, the first thing we have to do is define turnkey, because this is a term that a lot of people use and they use it to mean different things. So let me tell you what I mean when I say turnkey rental properties. We're talking about residential investment property, first of all. So it's a single family home or possibly a 2 to 4 unit property that's classified as residential. Okay. And it's a property that when you buy it, it's fully renovated and already has a tenant in place paying rent on the day that you close. So it's a fully performing property, a cash flowing property. And when you close on that property, it cash flows for you the day that you close. That's what we mean when we say turnkey. And that's what we're going to be talking about tonight, is when people want to buy a property like that, what are the 5 biggest mistakes that they're making and how to avoid those mistakes most importantly. Okay. So mistake number 1, and this is a big one, buying in the wrong markets. All right. Now this comes in 2 forms, and we're going to break this down. First of all, buying in the wrong macro market, and secondly, buying in the wrong micro market. So let's talk about both of them. Macro market is the big market, right? The city, the metropolitan statistical area. Okay. And a lot of people make this mistake. For example, they might buy in their home market. They might have a tendency to want to buy near where they live, even if that's not the most advantageous to market to buy in. All right. Now, if you're going to buy stock, let's say in a company, you don't need to buy stock in a company that has the corporate headquarters in your home city. You don't need to see and touch the stock certificate. But a lot of people have a tendency to want to buy real estate close to where they live so they can see it and touch it and be involved with it and all of that kind of stuff. Okay. That can be a very expensive mistake. Can also be a very expensive mistake if you choose to buy real estate in a place where you want to take vacations, or, you know, where your relatives are all living or buying, or your friends are buying here, or any other criteria besides an investment calculus can lead to buying in the wrong market. Okay. You want to buy in the most advantageous markets to own residential investment property, and that should be your top. And that is a macro market criteria. So looking at things like price to rent ratios, where you can buy relatively low, rent relatively high, and get a good cash flow margin. Okay. Also in that calculus is looking at low expenses, right? Where the property tax is not exorbitant, so they're going to cut out your whole cash flow, right? Where are you able to get a good capitalization rate where your gross rental income that comes in minus all of your expenses leaves you with a solid cash flow every single month. Okay. So you want to be looking at those kind of things, but you also want to be looking at which markets are in high demand. Where are jobs being created? Where is unemployment lower than the national average? Where are people moving into that market because they want to take those jobs? They want to live in places with a lower than average cost of living. They're desirable. They're attracting people. So where are those migratory trends going? Okay. These are demand indicators, right? There's going to be demand for rentals as people move into those markets, demand for people to buy housing, which is going to push housing prices up, right? Those are demand indicators. If you're going to own an asset, you're going to own a rental property, you want to be on the supply side of a high demand trend, right? So buying in the right market, super, super important. But here's what's really, really important that a lot of people don't tell you. Even if you identify a really advantageous macro market, that does not mean that you can buy any piece of real estate in that market and it'll be a good investment. And in fact, most rental properties, even in the advantageous macro markets, most rental properties will not be a good investment. Why? Well, number one, they're either going to be too high end, okay, expensive luxury property. You are not going to be able to rent that property out for enough money to cover your expenses and make it a profitable cash flowing investment. Okay, that would be a purely speculative investment, very risky, very dangerous, and oftentimes quite unprofitable. The other end of the spectrum, why properties would not be a good investment, is because they're too low end. They are not in a desirable, high demand rental neighborhood that is going to attract quality, stable, long-term tenants. And if you buy in an area like that, you're likely to have a high degree of turnover, a higher degree of potential default or non-performance on the rental payments, a higher possibility of eviction, and all sorts of things like that that are going to cost you money. Basically, a higher vacancy rate and a higher potential for your cash flow to be disrupted by non-performing or transient tenants, as well as higher maintenance and repairs. And that can eat into and totally wipe out your cash flow. So what you want to do is to look at the best markets, macro markets, but within them, you want to be able to buy in the real estate investor sweet spots, we call them, okay? Places where you can get a advantageous amount of cash flow and also have highly qualified, stable, long-term tenants that want to rent your property in that area. And you usually want that property to be in an majority owner occupied area so that when you're ready to sell down the road, you will have a built-in exit strategy because primary homeowners will want to buy your house because you bought it in a desirable area where owner occupants live. So those are the main things that I see people making mistakes on when they're choosing where to buy a market. They're either buying in the wrong macro market or in the wrong micro market, both of which can be quite expensive. Now, mistake number 2, failing to conduct proper due diligence. This is a big one, okay? No matter who you're working with, no matter if it's me, if it's Maverick Investor Group, no matter if it's any seller, turnkey provider, any company, and you know and you like and you trust the person that runs it, and maybe you bought 4 properties from them already and all 4 of them did great. Even if that happens, never skimp on your due diligence on property number 5. And always make sure that you're doing your own independent due diligence and you're never, quote unquote, trusting anyone to do it for you, because nobody can. And if anybody tells you they can, run in the other direction, okay? Now, what we at Maverick do is we support our clients in doing their own due diligence and accessing independent third parties not affiliated with us that they can use to do their due diligence, okay? But these are some of the things that you need to independently verify. Don't take Maverick's word for it. Don't take the seller's word for it. Independently verify. This is a minimum, okay? First of all property expenses. Is the property tax what the seller said the property tax was? Is the insurance quote what you think it's going to be? Get that stuff directly from the source. Look up the property taxes. Get the insurance quote directly from the person. Read the property management agreement. Make sure the monthly property management fee is what you think it's going to be, okay, et cetera, et cetera. Make sure those expenses are what you anticipate and what you're using for your cash flow calculation, okay? Next is making sure that you do your cash flow calculations properly. Now, a lot of people, especially sellers and marketers of these types of properties, will conveniently exclude certain types of expenses like a vacancy estimate or a maintenance and repair estimate. Now, the way that a capitalization rate is supposed to be calculated is that you subtract all of your fixed expenses like property taxes, insurance, property management fee, all that. And then you also subtract an estimate for maintenance and vacancy, okay? And then you divide your net operating income by your purchase price. And that's your cap rate calculation. So make sure that you personally are doing that calculation, because if 2 different sellers of property say, oh, the cap rate here is this and the cap rate there is that, well, they might be calculating that number very differently. So don't compare somebody else's cap rates, calculate your own and make sure you're doing it the same way every time, okay? Property condition. Always, always, always hire a professional, third-party, independent home inspector to inspect your property and give that inspection report directly to you. And then when you get it, then you can give it to the seller and say, hey, these are the items that the inspector recommends be fixed. And then you can agree with the seller on fixing those before you close, okay? Always do the inspection report. Always verify the fair market rent, okay? There are services now like Rent Range, for example, which will allow you to ascertain the fair market rent for an individual property at the individual address level. You can just type in the address and it will tell you what the fair market rent for that property is. Why is that important? Well, even if there is a tenant in place paying rent on your property, when you close, you want to make sure they are paying the market rent so that if they ever leave, you can reliably and quickly get another tenant to pay the same amount or more than that tenant, okay? So you want to verify the market rent. You want to verify the fair market value of the house, okay? Now, if you get financing and you get a mortgage, the lender is going to require that you have an appraisal, okay? If you're not, you can just hire an appraiser yourself, or at least get a broker price opinion by an independent third-party real estate broker. But usually you want to get an appraisal on the property. And then you want to check out the lease terms and the tenant qualifications. Okay, always review the lease terms and always review the tenant qualifications to make sure you're buying a property with a qualified tenant in there that is likely to stay for the long term and be able to pay the rent consistently. And then finally, reviewing the sales contract and the property management terms. Make sure you understand everything. Make sure you agree to everything. Ask questions. Interview both the seller and the property manager and ask any questions that you have before you close. Okay. Independent due diligence, super important. Every property, every time, no matter what. All right. Mistake number 3, failing to insulate yourself from market fluctuations, such as a market downturn. Now, I hear a lot of people that are talking about, is the market going to crash? Is it going to go back down? What's the market going to do? What's the market going to do? Folks, that kind of language is usually used by stock market investors. And the reason is because if you buy stock, you better hope and pray it goes up. Because if it goes down, you're in big trouble. You just lost money, right? If you sell. Now, with real estate, though, a lot of people apply that same concept to real estate. Oh, I hope the market goes up. Oh, if it goes down, I'll be in trouble. Real estate is very, very different from stocks, okay? Because if you're buying based on real estate fundamentals, one of the things that you will know is that if the real estate market does go down, that doesn't really affect you because you're going to continue to hold that property and collect that rent after month after month after month. So even if home prices were to downturn, and even if it was significant, if you bought correctly, that means you're going to still have a positive cash flow and money is still going to be coming into your pocket month after month after month after month. And you don't really care what the market does day to day, month to month, or even year to year if you are holding your property for the long term. That's why the strategy is buy and hold, not buy and flip. Buy and hold. You're not trying to make a short-term capital gain here, at least with us, right? We, Maverick, are helping our clients build portfolios of cash flowing rental properties over time. Buy a cash flowing single family home. 6 months later, buy another cash flowing single family home. 6 months later, buy another one. Keep building up your stream of passive residual income that's flowing to you every month without you having to work for it, because somebody else is managing your property and you're just collecting the rents because you're the investor. Right? You're not the landlord. With turnkey properties, you're an investor. Investors make decisions and they cash checks. Okay? You're not the landlord. Landlords deal with tenants, toilets, and trash. You're paying someone else to do that, a professional property manager. All right? So when you do that and you buy right and you buy based on real estate fundamentals, you're focused on your passive residual income stream that is flowing to you every month. And if the housing market goes down, that does not impact your cash flow that's coming to you every single month. Okay. So that's really, really significant. Do not speculate. Do not speculate when you are buying. Do not buy something that's going to have, break even or negative cash flow and say, oh, I hope this goes up. And if it does, I'll sell it for a profit and make a capital gain and I'll flip the property. And that is not the type of investment philosophy that we are involved in or that we encourage any of our clients to undertake. Okay. Sure, it can be strategic to buy in the path of growth, if and only if you are also buying based on real estate fundamentals. Okay. That means that buying in the path of growth means that if in fact the market continues to go in a particular trajectory, it continues to go up, great. That's a peripheral bonus. But if it doesn't, if it stays flat or if it goes down, you don't really care because you bought on real estate fundamentals and you're making your cash flow month after month after month. And you don't need to watch what the market is doing day in and day out, month in, year out, because you're just collecting your cash flow and that's what you're focused on. Okay. Now, this is the main thing, right? And then that also takes away the worry. Okay, the worry of, oh my gosh, is it going to crash? Is it going to crash? Is it going to crash? Well, it doesn't really affect you if the market goes down. If the market does go down, that means that the real estate's on sale. You can buy more now at a better price, right? Because the housing market is usually not connected directly to the rental market. So if housing prices go down, the rental market stays the same. Well, that's actually good because now you can buy more at a lower price and get the same amount of rent. So you actually get even a better cash flow margin as you continue to build your portfolio. So these are the real estate investment perspectives, okay, that are very different from stock market investing perspectives, for example, okay? Now, mistake number 4, failing to properly calculate your return on investment. And there's 2 sides to this, okay? The one side I sort of alluded to earlier where you're underestimating your cash flow by not factoring in vacancy, not factoring in repairs and maintenance. Okay. So don't overestimate your cash flow. We encourage people to estimate at least 7% of your gross monthly rent every single month. Assume it's going to go to vacancy at some point in the future, and assume at least 5% of your gross monthly rent is going to go to repairs and maintenance at some point in the future. Assume that. Okay. If your tenant's in your property for 2 years and they pay the rent every single month, great. Then let's say they leave and it takes you 2 weeks to turn the property over, repaint it, and then it takes you 30 days to rent it. So it's vacant for 45 days. Well, guess what? That 45 days, you have zero cash flow. If it's a single family home, right? You might, if it's a multi-unit, you would have some from the other units. But if it's a single family home, you have zero for 45 days and you still have your expenses. But guess what? You factor that in from the beginning. Okay, 45 days every 2 years, 7% vacancy, like no problem. You already factored that in from the beginning. You assumed that from the beginning. Okay, so amortize that monthly, make that assumption because that will happen. You will turn over your property. You will have some vacancy. That's a reality in real estate investing. So make sure that you're conservative when you're projecting your cash flow. Now, on the other side of the coin, okay, what a lot of people forget to do is to add in all of the other benefits that you get from owning real estate. Okay, now when you buy and hold your rental properties, again, this is not flipping. If you flip an asset, most of these go away, right? You get rid of the asset and you lose these benefits. If you're holding your rental property over time, you get a whole bunch of benefits, and let's talk about some of them. So the positive cash flow we have been discussing, right? Month after month after month, you get a positive stream of passive income that you are not actively working for that can cover an increasing amount of your lifestyle expenses. Now, in addition to that, if you got a mortgage on your property, okay, and if you're a qualified borrower and you can get an 80% mortgage, you only put 20% down, guess what's happening every single month when that gross rent comes in? It's covering your mortgage payment. What does that mean? It means the tenant is paying down your mortgage principal every single month. Okay. So literally, if your property did not go up in value a single dollar over the course of 30 years, which has never happened in the history of real estate, but let's just say it does, 30 years straight on, and your property doesn't go up a single dollar. Well, guess what? Your tenant over 30 years paid down your entire mortgage, and now you own the property free and clear. So you built equity that way, even if the market doesn't go up a single dollar. Okay. So you're building equity by having your tenant pay down your mortgage, right? Then you've got your tax benefits. Residential investment property is the single most tax advantaged asset class in the United States, period. Okay. The IRS allows you to depreciate the structure of your property, not the land. You have to break out the value of the land, but you can depreciate the structure of your property over 27 and a half years, even if your property is going up in value. And you can take a loss based on the depreciation against income from the property that would otherwise be taxable. Okay, so what does that mean? Well, let's say you bought a single family home for $170,000 and you broke out the value of the land and you said, okay, the structure is worth $135,000. Well, that means you can depreciate $135,000 over 27 and a half years. That means that you get a $5,000 loss per year through depreciation on your property. Okay. And you can take that $5,000 loss against $5,000 of income on the property, right? So if you would otherwise be in the, tax bracket, whatever it would be, 33% tax bracket, whatever you're in, on $5,000, well, now that $5,000 is no longer taxable because you wrote it off against your quote unquote loss, right? Your depreciation phantom paper loss. You don't have to pay tax on the $5,000. Okay. So you're saving $1,000, $2,000, whatever your tax bracket is that you would otherwise have to pay on that. Okay. Now remember, if you have $2,000 in tax savings and you only put, 20% down on your property, I mean, that in and of itself is a particularly significant, that could be a 4% return right there on the tax savings, right? Now, at the end, of course, you would need to, in theory, recapture your depreciation, although there's a way to do a 1031 exchange and indefinitely defer both your depreciation recapture and your capital gains. I'm not a CPA and I can't give you tax advice on this, but we have a whole bunch of content on exactly how to do this, as well as CPAs we can direct you to. So it's pretty amazing what you can do with real estate, but you got to remember to factor these things in to your overall return. Okay. The other one obviously is market appreciation potential. Okay. We don't tell people, oh, it's definitely going to happen. But guess what? Look what's been going on for the last few years. Okay. Markets have been going up and up and up. Certainly all the ones we've been in have been going up quite significantly. So our clients have been making a lot of equity through this market appreciation. All right. That's yet another profit center. And what you have to remember too is that if you're leveraged, if you use financing to buy your property, and you only put 20% down to buy the property, you still get 100% of the appreciation. Okay, so if your property only goes up 5% in value over the course of the year, but you only put 20% down, that is a 25% return that you just made because your property went up 5%. And you got 100% of that gain, even though you only put 20% down, right? So remember the market appreciation potential. And finally, the hedge against inflation. Okay. Real estate is unique in that it is indexed to inflation. So home prices rise with inflation and rents also go up with inflation. So each year when you renew your lease with your tenant, it's reasonable and normal and typical 2%, 3%, whatever the cost of living adjustment is. And so your cash flow increases and keeps pace with inflation. Also, by the way, if you borrowed that money from the bank and you locked in a 30-year fixed principal and interest loan, you're borrowing the bank in today's real dollars. Okay, if there's any inflation over the next 30 years, you're paying the bank back in future diminished nominal dollars, which means you're actually profiting from inflation. Okay, you're benefiting, the bank is losing. All right, so these are the unique aspects about real estate. And you got to remember, if you want an overall ROI calculation, to factor in all of these profit centers from the real estate. Okay. And mistake number 5 is the number one biggest mistake, how I see people losing money in 2019, waiting to buy, paralysis of analysis. Oh, should I buy here? Should I buy there? Is the market going to crash? Is it a good time to buy? Should I do this instead? Should I do this other stuff? People have been doing this. I've been watching them do this for over a decade. Okay. And I've watched what the real estate market has done over the last decade. Right. And it's gone up and up and up and up and up and up and up. And, there's just continually good opportunities to buy cash flowing properties, not just to get that, market upswing, but to get good quality cash flowing rental properties where you today can lock in uniquely advantageous price to rent ratios. You can lock in uniquely low mortgage rates, and then you can continue to ride whatever the remainder of the upswing is of this market. I don't know. I don't have a crystal ball, but you can ride that. And then whenever it goes down, you've still got your cash flow consistently, and you can just start buying properties at a lower price then and getting even better cash flow margins. So losing money by not buying in 2019 is the number one mistake that I see people making. The real estate market is on the move, and it is a unique historical moment to lock in incredible price to rent ratios if you're doing it in the right markets. All right. So with that, at this point, we're almost at that 30-minute mark. And at this point on the webinar, and this is always the case, right? There are usually 2 groups of people in the audience here, okay? Group 1 are people who do not have the money or credit to buy turnkey rental properties right now. That's totally cool. They're here for education. We welcome you. We encourage you. And I applaud you learning about the process so you can make a move when you do have the money and the credit. Or also in group 1 is people who prefer to spend their own time being a rehabber, being a landlord. They want to go out. They want to do it themselves. They want to spend their weekends rehabbing properties. They want to spend their evenings answering calls from the tenant and being the landlord and doing all that stuff. That's also part of group 1, which is not the right fit for what we have to offer in terms of working with us. Okay. Now, group 2 are people who want to buy turnkey rental properties in the most investor advantaged markets because they want to collect passive residual income from the day they close and continue to build their real estate portfolios. They do not want to be the landlord or the rehabber. They value their time, first of all, so they don't want to spend their time doing that. They want somebody else to do that. And they also like to invest with lower risk. Okay. They like to be able to walk into a property that someone else has already renovated. Someone else has already, if the renovations went over cost and they took longer than possible, somebody else has already eaten those costs for the renovation. Somebody else has already eaten those holding costs. Somebody has already eaten that initial vacancy rate while there was no tenant in there. They like to walk into a situation that has mitigated a lot of the upfront risk of getting a property to a performing condition. And they like to just do their due diligence, inspect the property, appraise the property, evaluate the tenant. If everything looks good, boom, they like to close and cash flow and start collecting their checks from the day they close and let somebody else manage it and deal with the tenant. That's group 2. And those are our clients. Those are the types of people that we work with and that come to us. And if you are in group 2, Group 1, you can drop off the webinar now if you're in Group 1. But Group 2, I have a special offer for the people that are in Group 2, which is a free phone consultation. Because the way that we work at Maverick is we want to get to know you. We want to answer your personal questions. We want to understand your personal buying criteria and help you meet your investing goals. So the way that we work at Maverick is we're a relationship-based organization. Okay. We want long-term relationships with all of our clients. We want to understand you personally and to help you invest in the right markets for you, buy the right properties for you, and build your portfolio so you can achieve your investment goals. Okay. Whatever those are, however quickly they are, retirement goals, sooner than retirements, retire early, whatever it is that you want to do from where you are now to there, we want to help you achieve that, design that plan, and knock that out of the park. And so I want to offer you a free consult so that we can connect with you directly, one-on-one, get to know you and see if it's a good fit for us to work together. Now, one thing I want to super clearly disclose is how does Maverick Investor Group get paid? Why are you guys offering me this free stuff? What is the deal here? How does this work? Let me disclose this super clearly. Maverick Investor Group designed our business model on purpose to be this way, okay? And I'm going to explain what it is and how it works and then why we made that decision. We are a licensed real estate brokerage. Okay. And what that means is that we can help you, the buyer, purchase a cash flowing turnkey rental property in a number of different real estate markets. Okay. So what happens is if you're a seller, you're a turnkey provider that works in one market and that's your market, you need to tell everybody that that's the best market to buy in because it's all that you have to sell. Okay. So anybody that, has shopped around for real estate knows that everybody's saying my market's the best, my market's the best. Real estate agents do the same thing. Why? Because it's all they have to sell. Okay. What we wanted to do is to become market agnostic and to be able to put the client's interest first and say, okay, what market is best for you? I don't care which market you buy in because we're going to get paid the same no matter where you buy. So we actually want to help you buy in the market that is best for you. Okay. So how do we get paid? We get paid by the seller at closing. Okay. So the way real estate works, and for the internationals on the call in particular, the way real estate works in the United States is that the seller pays all the brokerage fees. Okay. So this is the same whether you're buying a house to live in or you're buying an investment property. Okay. The reason why that's awesome is because you never have to pay Maverick a dime to work with us. Okay. The only way we get paid, in fact, is if we are able to help you identify a property that is such a perfect fit for your criteria and passes all of your due diligence, that whole regimen we just talked about, that you decide to close on that property. Only at that point does Maverick get paid. And even then, it's not by you, it's by the seller. So you never have to pay Maverick anything to work with us. And we have created this business model on purpose to financially incentivize ourselves to serve our clients. A lot of people ask for money up front, or you pay me to do this and then something, whatever. If we don't serve our clients and help you find the property that is the right fit for you, we make no money at all. right? So that incentivizes us really to work with you and understand you and help you to find the property that's best for you, because that's the only way that we get paid. So that's how the business model works. And then out of the money we do get paid, we donate 10% of our net revenue to causes that are important to us, that affect positive change in the world. So we have a whole charitable giving component at Maverick as well. And so that's also what we will do when we do get paid. We donate 10% of it, so that we are affecting positive change in the world. We are a socially conscious, socially responsible company. That's really important to us. That as our company does better, so too do causes in the world that we care about, trying to make the world a better place. So that's that. Now, I told you special bonuses for anybody that stays till the end. So here they are. Anybody that registers for a phone consultation with us today at this link, maverickinvestorgroup.com/goals. Okay. That's the link to go and register for your free consult. Anybody that registers for a consult today will also get access to these 5 resources. Okay. These are recorded videos, and you're going to get all 5 of them as soon as you register for the phone consult. Okay. Number 1 is how to evaluate risk when buying rental property. Number 2 is debunking the 13 rental property insurance myths. Number 3 is investment properties. Number 4 is how to determine market rental vacancy. And number 5 is how to use the Trump tax plan to make more money and pay less tax with real estate. It's an important one. There were a number of tax changes, and so we just did this video here to give people insight into the new tax law changes and what that means for your real estate investing. So you get all of these videos, access to all these videos for free when you register for the consult, which is also free at maverickinvestorgroup.com/goals. So at this point, I want to open up the chat room for questions, and looking forward to all of the questions that will come in. So feel free to just type those into the chat box, and we will start taking your questions live here as soon as they are coming in. I think there's a lot of people registering for the consultation, but we also have some questions. This again is the link to register for the free consult, maverickinvestorgroup.com/goals. And we will start taking the questions. Is this live? Yeah, this is definitely live. Rashawn, my man, good to see you on the webinar, buddy. What time frame would be considered long-term for tenants? Okay, so if we're talking about leases, usually a 12-month lease would be a long-term tenant. In some cases, you can do more than that. You can do like a 2-year lease, but usually most of these properties have a 12-month lease. Christopher DePalma, this is definitely a live webinar. All the Maverick webinars are all the way live. We do it like that. Allie Boone's in the house. What's up to all the hipster folks on the webinar? Phil Alexander is in the house. A lot of you know Phil, who is actually who you will be doing your consult with. So a number of people I recognize here that already know Phil. People that don't will meet him very soon. Phil is going to do each one of these individual consults with you and really, really get to know you. So you're going to get to know Phil quite well. I love all of the different places people are on from tonight. This is awesome. We've got Sherman Oaks, California. We got Nashville in the house, San Diego, all over the place. So does Maverick have a property management division? Bill, good question. So Maverick Investor Group does not directly manage these properties. What we do is we have relationships in a number of different markets that we consider to be investor advantaged, okay, with professional local market specialists that are from that market. And at scale, what they do is they buy distressed properties, they renovate them with their own construction crews, they lease them out to qualified tenants, Okay. And then there's either a vertically integrated management solution on the ground there, or there's a third party preferred management partner company that manages them. And then they offer those properties to you through Maverick Investor Group as a private off-market buying opportunity. Okay, so the properties that we offer are not going to be publicly listed on the MLS. They're not things that a real estate agent can find you. These are our relationships with these companies on the ground. These are separate companies we have relationship with, and they will offer those properties through Maverick to you. And they either have a vertically integrated management solution or a third-party local property manager. Now, with that said, Bill, also note that you can use any property manager that you want. Okay, so as soon as you close on the property, you own it. And you can do anything. You can live in it. You can hold it as a second home. You can lease it out. You can manage it yourself, be the landlord. You can use any property management company you want. There's no restrictions. There's no post-sale requirements. Okay. For convenience, we have a preferred property management solution in place when you close, which you are welcome to use. Obviously, interview the property manager, review the property management agreement, and so forth. If, however, at any point you don't like that property manager, they're not performing well, you'd rather move to a different property management company, no problem. You can do that at any point, and we can certainly support you in doing that. All right. Let's see. Michelle is asking, what are typical management fees for property management? Usually it's about 10% of the gross rent that they will take. And again, this is why you want to buy these things in markets with advantageous price to rent ratios. Okay. Because 10% of the gross rent is factored into your cash flow analysis. It's factored into your capitalization rate. And sometimes it's a little bit less than that. So sometimes it could be 8%, or so. So it just kind of depends on, the market and stuff, but you'll have all that information to factor into your cash flow before you close. All right, let's see. How do I find a property inspector that is not related to Maverick and would be independent? Bill, good question. So, there's a number of ways. First of all, you can just Google, right? Google property inspector, home inspectors and the name of the market, and you'll come up with a giant list, and you can hire any of them. And, the same way that you would find a home inspector for your, house that you're going to move into and live in, right? You could just go online, Google them, look for reviews of, that's all that stuff is online these days. So that's super, super easy. We're happy to give you a list of some that our previous clients have used if you want, but you can also just Google it on the internet and hire anyone that you choose. All right. So let's see. Timothy asks, what's your favorite market to invest in at the moment for single family rentals? Timothy, that is a great question, my man. The best markets change over time. This is one thing that's actually really, really important to understand in the turnkey real estate game. The markets that we were in 10 years ago, or even 6 years ago, are not the same markets that our clients are primarily buying in today. And the reason is because real estate in the US is not a big national market. It's a lot of little local markets. Okay. So 10 years ago, Phoenix, Arizona was it. 2009 bottomed out, was one of the first ones to hit bottom. Rents were still high. Prices were very low. You could lock in amazing price to rent ratios, and our clients crushed it. But when that market soared up 30%, rents didn't go up with the prices. So people that bought, back then, they did great. They made a whole bunch of equity. They're still getting the same cash flow, and they crushed it, right? They either have a whole bunch of equity now, or they sold and made a profit and bought something else and doing great. But it didn't make sense to continue buying, 30, 40% higher without getting any more rent, because what happened is a process called yield compression, right? When that happens, so the cap rates get squeezed, was not advantageous to continue buying there, right? So then other markets became really advantageous. 2011, Atlanta, Georgia was probably the hottest market, and then the same thing happened there, right? 30+% price increase, rents didn't go up as much, so you get a process of yield compression there, cap rates are lower. So today, Timothy, a lot of the stuff that we are seeing as the most advantageous is Midwest area, right? So Indianapolis, Missouri, Ohio, those kind of areas. You want to look for markets, again, as I said in the beginning of this webinar, places where jobs are being created, people are moving in, lower than average unemployment, good, solid economic indicators. But the Midwest markets that have those solid indicators are a lot of the places where you're going to be able to find those optimal price to rent ratios and quite low property taxes as well. So that's a lot of the, the region that we're certainly steering people these days. Great questions coming in. Let's go through a few more of these. Let's see. Could you walk us through a representative cash flow analysis? What kind of ROI can I expect? Okay, Stephen, what I'm going to do is I'm actually going to steer you to our website where you can look at a number of properties and see those cash flow analyses. Okay, so if you go to maverickinvestorgroup.com, that's our main website. Okay, you can just go to the properties section. And there you're going to see, now you need to, if you log in or create an account, you're going to be able to actually see a full itemized breakdown of the financials of all of the properties that are on our vault in all of these different markets. Okay, so you're going to be able to see this is a gross rent, this is the taxes, this is the insurance, this is a property management fee, this is a vacancy estimate, this is a maintenance estimate, this is a net operating income, this is a cap rate, and you're going to be able to see all of that for all of the properties. So just log in or create an account, and then just click on the properties tab and you'll be able to actually rock through a whole bunch of those yourself and look at what's available in different markets, right? Different price points, different markets, and you'll be able to do that. So I think that would be the best thing so you could see it visually, Stephen, just because I don't have a slide right here. And that would also give you a number of other examples. All right. So Brett is being involved with Maverick as a buyer besides the phone consult. Well, Brett, the phone consult is a really, really good first step, which is why we're encouraging it now, just so that we can get to know you. And one of the things we're going to get to know you, we're going to get to do on that phone consult is get to understand where you are at in your journey. Okay, so are you a person that needs more education? You do you want to learn more about certain aspects of real estate? Right? If so, we can steer you to free educational resources if that's you. If you're a person that has already read a bunch of stuff and you're pretty sure that these are your buying criteria, these are your investment goals, is what you need, but you want to talk to some professionals, you want to consult a CPA, you want to talk to an asset protection specialist about creating an LLC and an entity, and how does a real estate fit in with your estate planning and that kind of stuff. You want to talk to professionals. You want to qualify with a lender, see what what kind of mortgage rate you could get. We can introduce you to all those people. Okay, so we're going to learn that about you on the phone consult. We'll say, okay, cool. I'll introduce you to this lender that can pre-qualify you, or I'll introduce you to this person that can answer your questions on your personal stuff on asset protection, estate planning, or on taxes, or whatever it is that you need. We can then do that. Or if you're ready to, you're ready to move forward into actually buy a property, we can talk about which market is best for you, and we can kind of move in that direction and all of that kind of stuff. So depending on where you are in your journey, that's what we're going to be able to assess in terms of the phone consult, and then steer you to whatever you need that's going to be right for you. And then you can stay in the Maverick ecosystem. And if it's, I need to read a bunch of stuff and learn this stuff, and then I want to come back, and then I want to talk to these, professionals about getting my stuff in order, and then I want to qualify with the lender, and then I'm ready. So a lot of people, it's a path, right, to buying, and other people come in and they're like, man, I'm trying to buy 3 properties this year, and these are my criteria, and boom, 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 and then they just reserve 3 properties the next week. So depending on where you are in your journey, we will help you along the way in whatever way is best for you, Brett. But I would strongly encourage you to take this phone consult as the first step, and then from there we'll know exactly where to steer you and how to support you moving forward. All right. Any further questions, feel free to drop those into the chat box now, and we'll try to knock them out. Otherwise, feel free to go to maverickinvestorgroup.com/goals and register for the consult. You'll get all that free stuff too, which is high quality educational content that can hopefully help you a lot in your real estate investing. Just want to see if I skipped any questions here. I think we got all of them, and a big shout out to all the people that are on this webinar and that stayed to the end. This was a great group tonight. Really, really good questions. Okay. Last question. Do you ever suggest condos? Okay. Not usually. Not usually. And the reason is because they usually have very high expenses. So they will usually have high HOA fees. And especially if they're kind of higher end condos, the expenses can be very expensive and the rents not adequately covering those expenses. So usually we do not recommend condos. Single family homes typically are, or sometimes 2 to 4 unit properties, but typically not condos. Bill, typical price of the properties. I mean, most of the stuff we're doing is the very, entry level price, $75,000. High end would be $175,000. So somewhere in that range would be the single family homes. And again, that's depending on a number of things, right? Market, location, quality of the, interior finishes. Are they granite countertops and stainless steel appliances? And, that level of high end stuff in a higher end neighborhood, that would be the higher price echelon, and so forth. But that range, again, it also depends on markets. So some markets are a little bit more expensive, a little bit less expensive in terms of the housing. But all of that kind of stuff is really focused in on what we referred to as those investor sweet spots in those micro markets that we talked about at the beginning of the webinar. So that's that. All right, everybody. Appreciate everybody coming out tonight and joining us on this webinar. This was a blast. We are here for you, want to answer your questions, would love to build a relationship with you, get to learn about you, answer anything you want to know about Maverick, and see if we can add some value to your real estate investing. MaverickInvestorGroup.com/goals is the place to go for all of that. You'll get the free videos as soon as you register for the consult. And thank you again, everybody. Good night.